Hi there, welcome to kneppyinvests. When I asked my viewers what they thought would be the best performing company over the next 5 to 10 years, it was no surprise to me that one of the companies that came on top of, or had the most votes anyway, was Megaport, the focus of this video today. Megaport released their Appendix 4C on July the 22nd. So I'll be going through that quarterly cash flow report in this video. Now, I do have a mission to cover every single company that releases an operational cash flow positive June quarter. However, Megaport didn't quite get there in this quarter. They're awfully close. But since this company is quite popular among retail and fund managers, I thought I would take a brief look at their quarter and see how they are performing. Megaport is a fairly young company, formed in only 2013 by a fairly famous name. The name is Bevan Slattery. If you don't know the name Bevan Slattery, I think it is time to do a little bit of research about that name, because it is a fairly important name to know about if you're an investor in Australia. Just ask Pointera or ret.com.au shareholders, because when Bevan Slattery showed a little bit of interest in those two companies and put some money in those two companies, the share price of Pointera and ret.com.au went through the roof simply because of the name Bevan Slattery. What does Megaport do? The best way to think of Megaport is they are a network as a service provider. So they provide elastic interconnection services. They operate a platform that enables their customers to connect their network to other services. Ticker code of Megaport is MP1, and the valuation or the market cap of this company is quite lofty, 2.5 billion, particularly when you compare it to the revenue, only 68.2 million, which means their price to sales ratio is quite high at 37 or nearing 37, and the fact that this company is not profitable or operational cash flow positive. However, there are a couple of reasons why the valuation of this company is high. The first reason is this is a favored company among fund managers. And the reason this company is a favored company among fund managers is simply because Megaport has been spending a lot of money on their infrastructure. So they're building that infrastructure, knowing that in time, once they've built this infrastructure, they're going to see their revenues take off and their profitability and operating cash flow will go through the roof. Very similar to what's happening with Xero right now. That company has become operational cash flow positive and profitable, and the increases in both of those is going through the roof. And I think that's the expectations around Megaport in the next 5 or so years. If you want more information on Megaport and their Appendix 4C, they released that report on the 22nd of July. I do recommend having a look at that report because there's way more information in that report than I can give you in this video. Before we delve into the June quarter results for Megaport, just want to go back to the March quarter and see how this company has been progressing over the past 3 to 6 months. Receipts and customers, 20.2 million, which was less than the December quarter results. So maybe that did have an effect on the market because the share price was dropping at this point in time. And they were operational cash flow negative by $5 million or just short of $5 million. However, when you look at the cash on hand at the end of the quarter, they had $141.5 million to play with. And that's very important to have that amount of cash on hand, particularly for a company that's interested in growth, which Megaport is. And one of the most important things management of a company have to decide upon is it's all about capital allocation, how to deal with the cash they have in the business. And there's 4 things that management can do. They can give the money back as dividends, share buybacks, they can do acquisitions, or they can spend the money for growth initiatives or capital expenditure for growth. And more than likely, 100% likely, Megaport won't give any dividends. They won't have a share buyback. They might have some acquisitions in mind, but more than likely they will use that money to grow for the future. And that's very important for a company that is thinking all about growth. Now let's see how the company has performed for the June quarter. Receipts and customers, 23.2 million. So it has climbed. And in fact, receipts from the whole year, 87.5 million. And they have improved how the operations have performed during the quarter. So instead of being operational cash flow negative by 5 million, they were only operational cash flow negative by 202,000, and for the year operational cash flow negative by 12.8 million. So they're still burning through a lot of cash when you look at the yearly numbers, but based off the quarter results, that has been pulled back a little bit. Now, they did burn through a little bit of cash through the quarter, so cash on hand had come down from 141.5 million to 136.3 million. And the main reason cash on hand has come down is because they spent nearly $5 million on capital expenditure and $2 million on intellectual property. So they are still spending money on capital expenditure. And more than likely, most of that capital expenditure is for growth, not maintenance. And that's the best sort of capital expenditure a company can spend their money on. Let's look at the receipts history for Megaport going back to the December quarter in 2015, just after they listed on the ASX. Receipts from customers in that quarter was only 540,000. And this is one of my favorite looking graphs you can see for a growth company. It was an exponential growth in receipts up until the December quarter in 2020. Remember I said receipts had come down from that quarter to the March quarter. It came down a fair bit. So it went down from 25.8 million to 20.2 million. In fact, the last two quarters seems like this exponential growth in receipts has come to an end. And it's more like a linear growth, which is not that bad, but it's not quite as good as an exponential growth. But maybe the next quarter we can see receipts go up towards, say, 35 million, which would be a return to this exponential growth. In any case, the compound quarterly growth rate of receipts is at 18.6% since December quarter of 2015. If you saw that sort of growth in receipts or revenue per year, you'd be happy as a shareholder. But this is per quarter, and it's gone from less than 1 million to over $20 million in about 5 years. And that's a very impressive growth for a company like Megaport. And that's why the fund managers are interested in this company. It's why I'm interested in this company. And it's why the valuation of Megaport is over $2 billion. The first chart I want to show you with Megaport is the weekly chart going back to when they IPO'd on the ASX in late 2015. And nothing really happened with Megaport's share price for the first 2 years on the ASX. It just was going sideways. And then around late 2017, we did see the Megaport share price moving to a long-term uptrend. And that uptrend moved the share price from $2 to a high of $18 or $17.50, which was reached in October of 2020. And during that uptrend, we did see the share price come under a bit of attack during the COVID-19 financial panic, which pushed the share price down to $6. Would have been a great time to buy into this company. We did see a bit of a downtrend, medium-term downtrend in Megaport's share price between that high in October last year and round about May or April, May of this year, which did push the share price down from $18 to $11, but the share price did recover and get to a new high just a few weeks from when I'm doing this video, and that high was around $18.50. Share price since that high has come under a little bit of pressure, but it looks like it has found a bit of support around $16 or just above $16, and you'll be able to see that support when we look at the daily chart. And finishing with the 1 year daily chart for Megaport, and this includes this period of time when the Megaport share price was in this downtrend from about September, October last year to when it was broken towards the end of April this year. A classic downtrend signals here with lower highs and lower lows. In fact, there were 1, 2, 3, 4, 5, 6 lower lows. It wasn't until that downtrend was broken on 2 big up days on higher volume towards the end of April. That's when we saw a new uptrend develop. We did see a bit of a test of that uptrend a few weeks later, but then between the middle of May and the end of June, the share price really rallied fairly quickly, going from a share price of $13 to a top of $18.50. We have seen a bit of a pullback in the share price since then, but it looks like the share price has found support right on the 50-day moving average and has started to pull higher until today, the day I'm doing this video, the 28th of July. We have seen the share price under a little bit of pressure on this day, but it does look fairly healthy right now with this pullback on lower volumes. So if you are interested in taking a position in Megaport right now, could be a good time to take that position. Many companies on my to-do list, so I can fulfill my mission of covering every single company that achieves operational cash flow positive for the June quarter. The next 4 videos I'll be doing are on Damstra or Coda in Emerge Gaming. Now, I did have to think about Emerge Gaming for a little bit because that company is affiliated with a company called Crowd1, and Crowd1 is alleged to be just a giant pyramid scheme. There's a really good video on the Crowd1 by BBC Africa, so have a look out for that. And then Invion is another video I'll be doing over the next few days. And that's it for this video on Megaport's June quarter Appendix 4C. If you have any information you'd like to discuss about this company or any other company on the ASX, make sure you leave a comment or question in the comment section of this video. I am not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Talk to you later. Bye.